Hello and welcome to the AML Clinic podcast. Our guest today is Luke Haddon. Luke is the Money Laundering Reporting Officer at Keystone Law. He began his financial crime career at Linklaters in London and then New York before later joining Keystone in 2019. He oversees the firm's compliance with anti-financial crime legislation. He's responsible for setting and auditing the firm's policies in this respect and liaising with the relevant authorities should any reports need to be made. He heads the firm's client onboarding function and provides day-to-day support to the firm's partners, in particular as to how they manage and navigate complex national and international legislation relating to international trade, inward investment, and the purchase of super prime assets. Welcome to the clinic, Luke. Lovely to have you here. So, we actually both attended the Law Society's Economic Crime Conference recently. I sat in one of the sessions, which Christian Hunt was running, and he said something that I thought was really hilarious. When I grow up, I want to be a compliance officer, said no child ever. So I'm just wondering, Luke, are you the exception? Have you always wanted to be an MLRO?
No, not at all. And I think anyone who says yes would be lying. My career, I started with my law degree back in mid 2000s. I graduated in 2009 from Aberystwyth, having done my LLB, but into an economy that was in turmoil. Best description for it. I didn't want to do an LPC. I didn't see especially great value in doing that with the dearth of jobs that were out there, training contracts that were out there at that time. And what I in fact did is did my master's in forensic investigation. I went to a postgrad only university called Cranfield, and I was very much sitting in mud. It was a kind of a focus on the science side of it rather than the legal side of forensic investigation. And part of that was, forensic archaeology and anthropology. I loved it. It was brilliant. And I thought to myself, I'm going to go into the police from here. And then police jobs were kind of just as hard to come by as anything else. And 18 months of working in Currys after that, behind a customer service desk where you are dealing with very impatient and angry people. I kind of thought to myself, going back into law doesn't sound so bad now. And I started my career. I in fact started at Withers before Linklaters, but the role at Withers was far more administrative. And 2 years there, moved to Links, and I think I just flourished. It was a different environment, a bigger firm, lots more experience and viewpoints as to the different transactions and how everything joins together, and quite frankly how even on the most mundane commercial property transactions, there's asbestos, and what does that mean from a financial crime perspective? What does that mean from a reporting perspective? And after 6 years at Links, both I say here in London and spent a few years out in New York, it was a case of actually I'm ready for a new challenge now, and Keystone was perfect for that. It's a different type of firm. It's not as I say structured and lockstepped as some of the other firms out there at the moment. And what I am really grateful for is that you do have that exposure to partner level across the whole firm. You're not dealing with associates or trainees, and it's fed up the chain from there. You're dealing directly with the people doing the day job, doing the hard work, and understanding the intricacies of the deal. So actually you are able to explore and understand their clients in a far greater way. But did I know I'd be doing this? No, not at all. I mean, conflicts is part of what I do as well, and my wife has this perfect little thing at the moment where she's training my 18-month-old how to do type no conflicts, but AML is a lot more difficult, but I really enjoy what I do.
Well, that's lovely, Luke. So thanks for that background, and I'm pleased to hear that you're not the exception. You're the norm. Okay, so moving on to today's topic, we're going to be talking about the draft statutory instrument and the proposed changes to the money laundering regulations. So on the 2nd of September 2025, HM Treasury published a draft statutory instrument amending the UK's money laundering regulations, following its consultation and improving effectiveness of the AML regime. The final regulations are expected to take effect in early 2026. Now, the draft bill has actually been met with mixed reactions, and you share your thoughts on this in an article you published on LinkedIn on the 3rd of September, which is entitled AML Simplification in 2025, All Talk and No Real Change for Law Firms. So, for the benefit of those who are not quite so familiar with the proposed changes, do you mind talking us through what the government has proposed, and then we can explore the impacts that you envisage these may actually have in practice?
Yeah, of course, Michelle. So um, there's quite a lot going on in the draft SI that I genuinely, and if it's anything like the SRA's consultation on clients' accounts, will probably be rolled back quite a bit. I just have that feeling at the moment because the
Mm,
impact on or at least those with that might impact the legal sector will probably be rolled back quite a bit because the impact
mhm,
is going to be that great. I think the really key one that I have fears about is around pooled client accounts and how that will impact law firms on a day-to-day basis. And that's not just law firms, it's solicitors, it's clients at the end of the day. Um,
mhm,
the policy intent is clearly to expand the availability of pooled client accounts to beyond those that are law firms, accountancy firms, tax firms, whatever it might be, where there's a kind of just an approach in the market that's there already. What they're trying to do is bring in other availability or more
mhm,
availability of those pooled client accounts to greater numbers of different bank clients. Um, my fear is that, well, actually, it's going to result in far more testing. Um, we at Keystone, we have an Isle of Man branch, it's a wholly separate entity itself. But part
mhm,
of my day job is as deputy MLRO for that entity, and in
mhm,
dealing with their compliance queries as and when they arise. We've been dealing with client account testing in the Isle of Man for the past 5 years now. All of the major banks do it. There's very few banks, in fairness, that still offer pooled client account
mhm,
services in the Isle of Man or in the kind of Crown dependencies, because the implication is that they're just difficult to administer. Um, the testing that is there at the moment, it initially was a case of, okay, well, we'll bring in your reconciliation statement or give us your reconciliation statement for a certain month, and we're going to ask for your CDD testing on 5 of those clients. Well, the
right.
last time it was eight of those clients, 10 of those clients, and then all the
Mhm,
policies that we have to provide up with that. And this, at the end of the day, there's someone dealing with that. There is
yeah.
a cost to the account that we are dealing with at the moment. In the Isle of Man, it's a smaller jurisdiction. There is
Mhm,
greater availability of resource there to deal with that. We've got 9,000 law firms in the UK
Jeez.
at the moment. That's
Yeah.
law firms alone. You add in accountancy firms, you add in um, money service providers, whatever they might be that are looking to
Mhm,
use these client accounts, and you're going to be experiencing a huge backlog here. Now,
yes.
I think I can absolutely understand the policy intent behind this, which is to offer greater availability of these types of accounts to more customers. But I think that there has to be a reconciliation, to use that word again, or at least a recognition that certain users of these accounts are already heavily regulated. We are heavily regulated by the SRA. It feels like it's a gold plating regulator. And we are expected, and there's now a policy intent from the SRA to bring enforcement proceedings against firms that are not subject to Regulation 21 audits. Well, actually, there's a prime opportunity here if government really thought about this to tie those Regulation 21 audits to pooled client account services. That actually there is an obligation on firms that are undertaking these Regulation 21 audits to provide to their bank, their pooled client account provider, these reports that say, yes, we're okay, or okay, there are some things to improve. This is what we do to correct that, and actually put it on a frequency-based approach as well. So you could change Regulation 21 as an example to say, well, actually, rather than just regular audits, it's a audit must be carried out every 24 months, for example, and provided, and if there are any banking facilities to which this is tied, then it has to be provided to the bank within 60 days, as an example. It'd be a really clever way to approach what this might do. Now, that's my views on pooled client accounts. You can see I clearly have a lot of those, but there's a lot more within it as well. There's been a lot of trumpeting by HMT, not just through this policy note, but in the response to the consultation response that was released in July around, well, actually, what they want to do is simplification. They want to make it more proportionate. I see nothing within these draft SIs that do that. The only thing that might be arguable in that sense is the approach of high risk jurisdictions.
High risk
Now
jurisdictions.
they're saying, okay, we'll go for blacklist alone from FATF. Well, that's not recognising that our regulators, our insurers, our banks, they don't use that list. They understandably don't use that list. They're looking at the wider
picture.
grey list countries. They're looking at sanctions. They're looking at what they deem to be high risk jurisdictions. We bank with I'll say a Hong Kong based bank that absolutely gives it away, but they are looking at Hong Kong sanctions that play into this as well, and that's absolutely their approach, not just taking into account OFAC and how that applies to banking services globally. A rollback to Iran, North Korea, and Myanmar in our draft MLRs just won't change the needle on a real
in terms of on a day-to-day basis. What firms are doing in practice.
Firms will still do what they're doing, but then what you'll get is customers saying, well, Russia's not high risk. Well, there is that disparity. There is that aspect of, well, what the regulations say and what the reality on a day-to-day basis would be. And I can certainly say that our insurers might have concerns about certain jurisdictions that are not on that blacklist that we might be dealing with. I would have concerns about that because
the SRA would have concerns.
Absolutely. And what does that mean to kind of the day-to-day basis? You're dealing with lawyers who want to get the deal done as quickly as possible, and if they're saying to you, well, the regulations don't say this, there's another angle that ties in directly to this as well, which again goes back to gold plating of what the regulations themselves say and what the guidance provided at a sectoral level says, which is around source of funds. And again, there's nothing within this within the draft SI that really talks about that proportionality around source of funds. We saw in the consultation response in July around being more proportionate in that sense, but what I think people in the market, what those at the front line want to be seeing is something at statutory level rather than, well, this will be considered by guidance in due course, because the SRA is under a lot of pressure at the moment, and this is without even kind of taking into consideration pressure the government will be under in the future 2 years around the mutual evaluation from FATF. If there is a rolling back of regulation, what does that impact in terms of the UK's global standard there? There is a wider geopolitical consideration that we need to be cognizant of here. But everything must come back to the risk-based approach. That is the FATF approach here. Is what we are doing sometimes in respect of fairly mundane, vanilla, UK domestic, pure conveyancing, is it disproportionate to the actual risk that you are dealing with? And if you are adequately writing something down and you're at the front line in dealing with with something. Um, I think that there's something here that is about opening the market, changing things, allowing deals to move more quickly. And I think an awful lot of clients, an awful lot of our frontline lawyers, conveyancers dealing with this, what they struggle with is that the guidance there isn't particularly all that helpful, because
Hmm.
there's just so much variation as to what is proper and appropriate.
Mm.
That's in the guidance, let alone when you're looking deal to deal to deal, where circumstances just change. That's probably the thing I find hardest on a day-to-day basis, is someone coming
Yeah,
to me to say, what do I need to get for source of funds?
in
And
this situation. Hmm.
it's absolutely, and it's so difficult because you can't really say you need to get 6 months worth of bank statements. Because 6 months worth of bank statements tells you nothing if the 500,000
Absolutely.
was in the bank the month before,
Absolutely.
and who knows where that came from. There's just so much that you need to do, and it's far easier when you're dealing with mortgaged approaches. And I think that's what I think there's a real opportunity for here, which is that proportionality around those mortgaged conveyancing, which is that up to a certain value. I'm not saying, say, you're 2.5 million worth, but if you're dealing, if our lawyers are dealing with a conveyancing under £1 million, and say 3/4 of that is going to be mortgaged, and let's face it, that's not a particularly large mortgage comparative to the market as a whole in London. Well, actually, do you want to be diving in too deep into the wider deposit level on that, especially if there's a help to buy component as well? Because I mean, that all comes back to, but where did Granny get her money from? She's been
So I
putting it
think
into
this
the
is
bank account.
this is where the risk-based approach really does come to the fore, is that you are able to risk assess, or you absolutely should be risk assessing the client's profile, the transaction. So the risk-based approach for me is about taking the right action based on a particular set of circumstances. So in that situation, it'll be a case of, well, actually, there's a high level of mortgage to the amount of deposit. The client's profile is that they're earning 500K a year, and based on how much they're earning, is it plausible that they've been putting away X amount of money to have this deposit over the last 5 years? Okay, I've looked at 6 months bank statements. I can see that there's a regular savings pattern. Do you see what I'm saying here?
I,
So I think this is where
absolutely.
actually the risk-based approach does work. But I do appreciate that the difficulty is that you then, I mean, the alternative, so I'm going to ask you a question really, is the alternative to a risk-based approach would be to have a prescriptive approach. Would that be a better option?
Uh, no, I think that's the difficult thing here, because your prescriptive approach will probably say something like, get 6 months or 12 months of bank statements. But if your £500,000 salaried client has been saving it for the past 4 or 5 years, how do you know that there isn't a large deposit in that month 13 in the past, that
Absolutely.
actually changes it entirely? And
Definitely.
I think that it's the difficult thing. What I really drive home to our lawyers on a day-to-day basis is write it down.
Mm.
It's the key thing here. It's write down your thinking. It's saying why
Yes.
what you're doing is appropriate to you in the circumstances, because
Yes.
you're the one who's seeing the big picture here. There's sometimes a drive in this sector as well to say, well, can't compliance do this for me?
Mm.
Everything here is about know your client. We don't know the
Yes.
clients. We aren't dealing with them. We're not doing the business development. We're not understanding the deal in the intricacy, or to
Hmm.
the intricate nature that the lawyer should be doing so. Hence why what you want is someone really engaged and wanting to do what they can to comply as far as possible. It kind of ties into this aspect that sometimes firms take an approach of, well, you need to give us everything we need for client identification and source of funds before we start any work at all. Things change. Things
Mm.
change through the deal time itself. And if you are dealing with AML as a one-time aspect, and you shouldn't be doing so, with ongoing monitoring
Yeah.
how this plays into this. But
Hmm.
if you're not opening the door to clients until they provide you everything, and actually You might get some people who just know what they know what the lawyers are looking for, and consequently, they're actually probably the ones more to worry about because they've been through this before. They whatever it might be. That actually, um, you want to be. It's a client service at the end of the day, and I say this to all of my new joiners when they come into the team, which is around best things I learned that apply to risk and compliance more broadly are those that I learned on a customer service desk at Currys. It's about asking the right questions,
Yes.
understanding more, and building out. And especially with technology nowadays, that you can on a Teams call have the notes afterwards, and it gives you everything you need, and you can say to that lawyer, "Here it is. Pop it on your file."
Yeah.
It kind of plays into kind of a wider consideration here, which is that compliance isn't free. It's very different here at Keystone, where okay, their compliance is paid for out of the 25% of the fees that we keep broadly, but actually this needs to play into some kind of governmental thinking here and sectoral thinking, which is that the more roadblocks, the more obstacles that are put in the way of getting a deal done, actually, there is a financial impact of that. You're going to see firms that are pushed out to the market. You're seeing this more broadly with the number of mergers that some other firms are doing at the moment, and they're pulling things together and streamlining, yes, but actually taking away that competition for clients to get the best deal that they might want to be want to be looking for.
One thing that you said that really stood out to me there was number one, the write it down approach. I absolutely 100% endorse. That's the only advice I'll give to anybody who doesn't know. If you don't know anything about AML and you go, what's the one thing I need to know? Write down whatever your rationale is at the point of doing. So that's one. Two, the relationship between the compliance team. So obviously for those that have the resources of having a compliance team, because some firms don't, as well as the fee owners or the partners working directly with a client. Sometimes when I used to go into a firm to audit and you speak to the fee owner and you say, oh, so how do you do this? And they say, oh, that's not my job, that's the compliance team's job. So it's that relationship. Everybody needs to know we're all in it together, and we're all responsible for making sure that our firm is compliant, because getting this wrong, there's some personal liability, depending on what the issue is, and also, the issues for the firm, reputational issues. So I'm really pleased that you said that.
It's culture at the end of the day. If you're building the right compliance model that actually people want to buy into, and your training doesn't need to be, okay, tell me about the 3 stages of money laundering. Tell me about sections 327, 328, 329. Tell me about 330. It's not that. It's spot it and raise your hand. Tell us about it.
Yes.
We are the subject matter experts. We all know when something doesn't look right. You get that funny feeling in the pit of your stomach, and it's training people to recognize that and saying, well, actually, I don't want to be an ostrich here. I want to stick my hand up rather than the head, and really kind of just probe it, because we are. I think people think of compliance certainly as red tape, but as the gatekeepers, we stop them doing what they want to do. I just don't like that. I think it is a case that what we are is we hold the keys. We are the ones who unlock the door to let them proceed to where they want to get to, which is proceeding with the deal in the most expedient way possible. We don't want to be losing clients. We don't want to be losing deals just because we can. We want to be able to ensure that we are protecting the firm, protecting them as much as any. And look, if you're buying a property from someone where there is a concern about the profile of that individual, you're protecting the client at the end of the day. And whilst the Uyghur case hasn't yet taken too much it's not thrown the bombshell in that I thought it might have done as yet, but adequate consideration how that might change in the coming years. Again, to go back to the Isle of Man, it's something we've dealt with for a long time over there, and it really does limit access to justice. And that's
so
on a
sorry. Look, I'm
day-to-day
not
basis.
actually. I'm sorry. I'm not aware of how it works in the Isle of Man. Are you saying in the Isle of Man would you have to actually understand whether like money is coming from, if say your client was paying
Absolutely,
for
yeah.
fees? Oh, really?
Yeah,
Interesting.
so and even if you you can submit SARS, you can submit DAMLs in order to be paid with that, if there are any concerns about the funds. But more broadly, it is a case of, well, if it's a purely Isle of Man case and a purely Isle of Man individual, and they are subject to
Okay.
some concern, you have to delve down in deep. And quite frankly, a lot of the work that is involved there, it will be uh, more costly to go through the process of understanding the source of those funds than it will be the work itself. And what
Yes.
that means is firms don't take on that
Is it worth
that
doing?
type of work.
Hmm. Hmm.
It's quite prohibitive in terms of how people are impacted over there. And I think that's part of my concern here, is that with the pooled client account aspect, if the banks can come in and say, well, actually, we've seen this person in the news for here or there, we're not happy accepting funds from them into the pooled client account, we're going to take away your account because you've not told us about this in advance. Well, actually, everyone deserves justice. Everyone deserves
Yes.
representation, as long as adequate consideration is still allowed. I mean, how is this going to impact solicitors' firms who deal with primarily criminal work, acting for
Yes.
drug dealers as a good example here?
Yeah.
Um, it'll just take away that market entirely for what firms can do and who can represent who.
Yeah.
I
There's an access
just
to
don't think
justice
that that's
element.
it really is.
Yeah.
And the more people talk to HMT about this and give that extra outside view that that this does have real world implications,
Hmm.
then all the better. And this, I mean, Kiri Whitmarsh made a very good point in a session on Tuesday, which is around money laundering has real world consequences.
Hmm.
There is modern slavery. There are God knows how many. I mean, we see it on the high streets day to day. And actually, if it's pushing up rates, it's pushing up prices. You are feeling this in your pocket day to day, where
Hmm.
actually there, there there's just an awful lot to think about in this aspect, and clients feel it in their pocket because
Yes, firms
there
are
are
feeling it.
there are compliance people everywhere.
Yes. If by chance, any members of the government, legislators, enforcement are listening, do you think there's anything that has been missed, that you think there's a missed opportunity that you haven't discussed already, in the draft bill, that you think actually, because you talked about the Regulation 21 and tying it in with the pooled accounts and the changes, the testing that's going to come in, do you think there's anything else as a sort of final plea that you would urge them to consider?
I, whether this happens before Moneyval mutual evaluation or not is another thing altogether. But I think that
Hmm.
the sheer number of Schedule 1 supervisors just creates confusion within the,
Right.
the market as a whole. And when I say the market, I mean the consumer market here. Um,
Hmm.
in not having a joined up approach as to what is actually appropriate or best guidance in certain circumstances, you, you will have done or generally have fulfilled and shown a proportionate response if you have done X in these
Sure.
circumstances.
Sure.
Having that across the whole kind of the regulated sector will give far more certainty. And I think that if there is anything here, it would be around thinking around, um, well, actually, what can we do to create a central supervisor of this? This ties into the pooled client account point that I made earlier as well, which is around, well, actually, if you are doing Regulation 21 audits, have certified Regulation 21 audit providers. Give
Mhm.
something to the banks to be able to say, you can rely upon this firm that has carried out an audit of that law firm, has done it appropriately. And actually that will create the kind of I say supervision within the market as a whole, but it won't create the lags and delays that I think the draft SI as it currently stands
Mhm.
will create. It'll keep things moving, and I think that ties back to the wider um, aspect around what the government wants to be doing at the moment, which is reducing red tape.
Yeah.
The draft
Yeah.
SI as it is just increases the red tape. And
Yes.
I've only talked about law firms. I've not talked about the other um, uh, participants in the
Regulated
market
bodies.
here.
Yes,
Yeah.
absolutely. Thank you so much, Luke. I really appreciate you taking the time to come and speak to us. So that's it. That's it for this episode of the AML Clinic. And I hope today's discussion has been insightful for you. If you have found the episode so useful, consider sharing it with your colleagues who live in the world of nuance, risk, and razor-thin judgment calls. And if you've got a topic you'd like me to cover, I'd love to hear from you. Thanks for listening to the AML Clinic. Until next time, stay informed and stay compliant. Thanks, Luke.